the other topic I wanted to cover today was Fibonacci, but not in a way that we're going to get into how to use Fibonacci. I wanted to at least introduce how you can set it up on your chart and use the levels that I use. And then we'll go ahead and tackle some questions, okay? So, Fibonacci is just like everything else we've been talking about, just another way to identify support and resistance in the market. Okay, that's it. The support and resistance that we're identifying, and let me contrast that to pivots that we talked about last week. If pivots are support and resistance that we calculate by using the high-low close of the previous day, of the previous session, then Fibonacci is using the last major rally or sell-off to identify support and resistance in the market. Okay, so when you want to apply Fibonacci to a chart, you can either utilize the actual icon here that's in a menu, that's in your menu bar, or you can go to Insert, Fibonacci, Retracement. Okay, now you notice I've got this on a black background chart. I just drew a Fibonacci, but none of us can see it, can we? All right, so if this happens to you, you'll notice that there is a red dotted line that represents where I drew the Fibonacci. If you give it a double click, see how there's some white dots that have just popped up? Again, all I did was double click it. When you've got the white dots, you're now in editing mode, for example. Okay? If you right click the line now, you can go to Fibo Properties. And what we're going to do here is basically tell the system what percentages we want it to show, okay, and in what color. Now I can't see this, so I'm going to go ahead and make it white, right? And if you notice, now, lo and behold, I can see the Fibonacci numbers and at what price they are printing. Now, if you were to go ahead and utilize the Fibonacci the way it comes out of the box, so to speak, on the platform, it will only have a handful of levels. I'm going to show you the levels that I utilize and this special little code symbol of codes here, code of symbols here that you can use to have the price also marked on it. So common Fibonacci levels are the 23.6, the 38.2, the 50%, the 618. Now that 618 was that golden mean I talked about. I didn't want you guys to confuse the golden cross of the 50 period and the 200 period with the golden mean of the Fibonacci retracement. All right? So the most popular Fibonacci levels are the 38.2, 50, and 618. Now notice when I'm adding a new Fibonacci level on the left side, you notice the way that we have to use with the decimal place, 0.382 versus 38.2. Now the description is just that. This is not the calculation. This is the calculation actually on the left side. I'm looking for a 38.2 calculation of the last major move. Okay, but the visible description that I want to see accompany my price is 38.2. And then notice I followed that with the @ symbol, the percentage symbol, and the dollar sign. And what that does is tell me what price the 38.2 is plotting at. Otherwise, you would just get 38.2 and no price. To me, having the price there is good because that's the support resistance level that I'm watching. Notice that right now, the daily Euro-US dollar has reached at 23.6, okay, which is plotting now at 37.75. Okay, so what are some other levels that I put in here? Now, the 100%, obviously, that's a full retracement. Beyond the 100%, we get into what are known as extensions. You're getting beyond a full retracement. That's known as an extension. So the extensions that I like to look at, I'm going to actually add in, you can see this one here, I like to add the 1.272, okay, I like to add in the 1.618, which is here. Okay, again, see the level represents the actual calculation that the system is going to use, and then this is the description that is visible here. Okay, I also like the 1.886. Okay, these are all extensions. Now notice you can actually see all my retracement levels here. 23.6, 38.2, 50%, 618%. I also like the 78.6% and the 88.6%. These are very powerful levels as well. They're not as common, but they're extremely powerful. And what happens is if you don't have these two, you end up with a huge gap between the 618 and the 100%. And there are resistance levels up in here, or support levels up in between this big gap if you don't have it. So this kind of gives you a little bit more guidance in between what ends up commonly being two big gaps. We use the 23.6, so there's not a big gap between the 0 and the 382. And we utilize the 88.6 and the 78.6, so there won't be a big gap between the golden mean and the 100%. A lot of traders use just these three, 38.2, 50, and 618. And while that's better than nothing, it's certainly not what I think is the full complement of Fibonacci support and resistance levels that you could benefit from if you're already taking the time to go ahead and draw the retracement to begin with. Okay? So again, you right-click, you go to Fibo Properties, and plug in the levels that we just talked about. And you can see them here right on my chart. All right, so what we're going to do now is go ahead and answer some questions. Okay? About some of the concepts we talked about here today, market cycles, PRS, and a little bit of Fibonacci. Bear with me here. We have a lot of questions, and like I said, I can definitely see that we've kind of jumped in terms of, I guess, ideas in terms of going from what was basically probably novice to intermediate to really a little bit more advanced. For those of you that are feeling a little lost, don't be concerned. We're going to continue to introduce these ideas, but at some point we just have to cover them, and that's what today was all about. It's a lot of ideas in a very short amount of time, but it's very beneficial if you can at least put these in your head and realize we'll fill in the gaps as we go along. All right, so again, the PRS is available. It's a chart pattern scanning, alert, and recognition system. Please do not confuse it with some sort of buy and sell system. That is not what its intention, what it's designed to do. All right, the three lines again on the chart are the 34-period exponential moving average. 34-period. On the high, the low, the close. Those make up the tool called the wave. It's a study that I utilize within the look back. It's a study on my own. We utilize it to represent, to identify market cycles, and also it represents some support and resistance within the context of a trend. We utilize the clock angles to identify which market cycle any chart is in. Okay, so when you go ahead and you put together the look back and my 34 EMA wave and utilize the clock angles, you'll get a good idea of what type of market cycle you're in. Okay, and by understanding the market cycle you're in, you can now utilize a tool like the PRS or even the plugin, which will soon be available, right on your chart, and determine whether you can trade a channel up pattern or a triangle pattern or a wedge pattern, making sure that it's occurring in the correct market cycle, that it's what I call a good pairing. Okay? Just because a pattern has formed does not mean that it's a valid pattern for the underlying mood of the market. Okay? The white moving average you see is the same moving average we've had for the last couple sessions, and that is the 200-period simple moving average. Okay? All right. So again, when you apply the three moving averages on your chart, I showed you how to do it manually. This has a lot of the moving averages. This is the golden cross. There's that 50-period simple, 200-period simple, as well as the three moving averages. Remember, moving averages are terrific in trends to identify support and resistance. Okay? They're quite terrible in a sideways market to identify support and resistance. we talked about market cycles today, and we had talked about indicators a session ago. And remember that even indicators have particular market cycles that they are best used in. If you're a fan of stochastic, you're going to love distribution market cycles. You're going to love them. You're going to even like accumulation, but you're going to love distribution because that is exactly what a stochastic is designed to analyze best. Okay? If you like the MACD, the Moving Average Convergence Divergence Study that we talked about, the MACD traditional that you can get through IBFX, you're going to love accumulation cycles to identify